of Vanda Insights, coming to you from Singapore today, where it's a lovely, hot and humid afternoon. I'd invite you to welcome our guests, speakers today, Mark Oswald, Chief Economist and Global Strategist at ADM Investor Services International, Gulmira Razayeva, Founder and Managing Director, Eurasia Analytics, and Daniel Rahmat, Senior Energy Consultant, Iran. So as we start this show today, Brent has slipped well below $93. And just to remind ourselves, it was just a couple of days ago that it had bounced above 95. And of course, in the past few days and weeks, we have seen renewed predictions of the century mark for crude. But let's start with the more sort of immediate and dominating news headlines overnight, which was, of course, the Fed decision and perhaps more importantly, Chairman Powell's remarks after the meeting yesterday. So, Mark, let me start with you. The markets are digesting the Fed's policy decision. Of course, perhaps will continue to do so for the rest of this week, as well as Powell's comments and the economic and rate trajectory projections by his peers. Any surprises for you there? And how would you say the oil market participants should be processing everything that we heard from the Fed last night?
Well, I suppose the biggest surprise in all of it really was the fact that they adjusted their rate forecast for 2024. So they've still got one more rate hike priced in potentially for this year. I think that's not really a genuine threat. It's just to send a message to financial markets: don't price in rate cuts. Yeah, it's a very simple message, and it was reinforced by the fact that they've raised their forecast for next year from a median rate of 4 5/8 to 5 1/8 for next year. So they're basically saying higher for longer. And if you haven't understood that, we're really obviously falling on tone deaf ears. So in terms of the message for the oil market, I think it's also the same message for the economy. You know, we've had 500 basis points of rate hikes in many countries. At this particular point, arguing about whether we're going to have another 25 or 50 doesn't really matter. It's not material. It's not going to make much difference to the economic outlook. But if you look at their forecast for the economy, basically they're saying inflation is probably going to come down, be a little less than we thought, but unemployment is going to, the labor market's going to remain very tight. And growth is turning out to be better than expected. So basically, I think the simple message, and you're seeing it in the EIA data yesterday on oil inventories, that there are signs, particularly for distillates, i.e. diesel, that things are picking up, particularly in the trucking sector. And that's an encouraging sign, because that's been one of the areas where people have been concerned that the economy is actually slowing a lot more quickly than the Fed has been suggesting.
Yeah, there seem to be perhaps more worries, would you agree, with regard to the ECB having to continue increasing rates and Europe's economy? I mean, we had some pretty downbeat projections from the OECD earlier this week. Do you see that sort of contrast as well between the outlook over the US and the European economies?
Yeah, I mean, the European economies, and this includes the UK, the outlook is not good. And that's a very good reason. Okay, the ECB hasn't firmly signaled that it's in pause mode, but it is basically. And I suspect the Bank of England today also to pause rate hikes and also to signal that we're, as Mr. Pill, the chief economist, says, we're on Table Mountain, i.e. higher for longer.
Okay. Okay, thanks for that, Mark. Gulmira, wonderful, especially to have you on the show today, because the Nagorno-Karabakh conflict has been in the spotlight again, just in the past few days. So this is between Azerbaijan and Armenia. I'm sure there's plenty of history between these two neighboring countries that one could unpack. But I'd like you to speak to the present, if you can, about what implications do you see of this conflict between the two countries? Especially, is this causing tensions vis-a-vis their relationship with Russia and their relationship with Europe, especially with regard to gas supplies to Europe?
Yes, that's indeed a very important issue. And to put it very short, what happened yesterday is that, after the war, which broke up in 2020, both President Aliyev and Prime Minister Pashinyan, they actually committed to sign peace agreement, and Armenia committed to withdraw its remaining military troops, which is around 10,000 militants from Karabakh, the Azerbaijan economic zone of Karabakh, and Baku has been quite patient, waiting for 3 years before Armenia, withdraws its military troops, and those militants put down their guns, disarmed, and finally peace comes to the region. But this never happened. So this never happened despite all the commitments that Yerevan took. So the casus belli, just the day before this happened, I have to say that the Armenians militants, they've been committing a number of crimes and actual terrorist acts towards the civilians in Karabakh, Azerbaijani civilians, putting mines on densely populated places, roads that being used. And just a day before this all happened, 6 civilians were killed on those, blown up on those mines. So that was kind of a casus belli. Then the Azerbaijan, Baku, decided to start this anti-terror act against these militants, remaining militants in Karabakh. So, well, the good news is that we finally reached ceasefire after 24 hours of this anti-terror operation initiated by Azerbaijan. Ceasefire is reached. They agreed this actually criminal military junta. They agreed to put their guns down and start negotiations. So today, as of in an hour or so, they're gonna start negotiations. Azerbaijani side will start, talking with the representatives of Armenian community, decent Armenian residents of that region, to find the ways of integration of this, Armenians into the Azerbaijani society, and hopefully this will be done in smooth and peaceful way. With regards to the, its implications to oil and gas transportation, I don't see any negative implication on energy transportation from this region, from Azerbaijan. The gas export from the country has been increased in our last year, and especially last few months, because the region in Europe, Southeast European region, that desperately needs this gas coming from alternative source via new routes, and they increased gas imports from Azerbaijan, and this trend will be continued in the following months and years, even more. From 2027, the European Union is planning to double gas imports from Azerbaijan, from 10 BCM to bring it to 20 BCM. And with oil transportation, the same. Azerbaijan's continuing exporting oil to bird markets through the Baku-Tbilisi-Ceyhan, and moreover, it's also increased oil transportation from Kazakhstan and Turkmenistan after the war in Ukraine. It's been quite difficult for these countries to export their, crude and products via Russia. So Kazakhstan increased actually tremendously its oil transport via Azerbaijan, Baku-Tbilisi-Ceyhan pipeline, and Turkmenistan increased oil product export via the same route.
Okay, so that's definitely at least a sigh of relief for the oil and gas markets, not to have any more supply disruptions. Thank you for that. Daniel, so of course, I have to ask you with the most obvious question first, which is what we have seen transpire between the US and Iran in recent days and weeks. There's been a prisoner exchange. Iran has released American prisoners, and we understand that the US in return has unfrozen about $6 billion of Iranian funds. Could you walk us through what do you see is the main key significance of this development, and in terms of, especially in terms of Iranian flows into the global oil markets?
Hello and good morning, everybody. Mark, Admira, and you, and of course. Regarding the new deal between Iran and America, I believe it's part of a bigger deal, which cannot be considered limited to the actually releasing some prisoners and also releasing some frozen funds in Korea or elsewhere. Technically, it's said that the frozen assets of Iran in Korea or in Iraq are going to be delivered to Qatar and also Oman, and those funds will be used for importing humanitarian goods, including medicine, food ingredients, and blah blah. So that would be a very big money for importing such amount of goods. You know, I don't believe Iran has the necessary needs of something. You know, first let me tell you something. The money is not limited to those $6 billion, as Iranian officials emphasize. They're telling that it's about $23 billion something, because it's not limited to the $6 billion of Korea. But they're not very clearly telling us what the money exactly is and which banks are involved in that. But as long as I'm concerned, the $6 billion are already transferred from Korea to Qatar, and they're transferred to the Iranian bank accounts in Qatari banks.
So Daniel, just to make sure, sorry, that I understand you correctly, and as do our viewers, are you saying that the release of this $6 billion is part of a release of a total of $23 billion, which is going to come about?
Right, it is said so, but you know, different officials.
Oh dear, we lost him just at the crucial answer. Have we lost him, Madeline?
Yes, we lost him. I think he's just coming back.
Okay, we do know Daniel was having trouble logging on earlier as well. Okay, well, I hope we can get him back and get the $1 million or $1 billion answer back from him. But for the time being, let me go back to you, Mark. And let's talk a bit about Europe's gas situation, and in general, Europe's energy supply situation going into autumn and winter months. We had the Australian LNG strikes, and well, one of them is still on the Chevron facilities. And we've seen quite a few days of spikes in the TTF gas prices in Europe, and then some of it rippled through to diesel and crude as well in the weeks gone by. Now, of course, none of us can predict the weather. But to the extent that you have visibility on Europe's plans for securing their gas and LNG and diesel needs, how do you see this winter panning out for the region in terms of energy supply?
Well, they had their gas reserves, what they can stock already stocked by beginning of August. So there was no problem there. The bad news on that front is the main reason they've got it totally stocked is demand destruction. If you look at, energy intensive industries in Germany, chemicals, fertilizers, that's such like, output is down 20 to 25% year on year. Other industries, I would stress, actually have dealt with the situation. Their demand is less, but their output hasn't fallen because they are basically taking energy saving measures. In terms of what the outlook is for the winter, as you said, I don't know what the winter's going to be like. My guess at the moment is that it's probably going to be warmer rather than colder, and so the pressure shouldn't be there. I think the bigger issue for Europe is basically the signs of a downturn, particularly in the German manufacturing sector. You've got the PMI sub 40, not sub 50, and all of the other ones in the low 40s. It really does underline just how much of a carryover effect from the price shock there's been. Basically, for a lot of businesses in Europe, which are energy intensive, they basically had to reconsider whether they want to restart up. Yes, gas prices have come down. Yes, power prices have come down, but they don't feel any confidence that there won't be another shock at some stage. And while they're looking at oil prices at the moment, they're probably feeling, and we're justified in that.
Where do you estimate the so-called destruction in gas demand? So let's say compared to 2021, what percentage of European gas demand do you think is gone, and is it permanently gone?
I would suggest it's in the region of at least 10%, and I think it could well be permanently gone. You also have to balance this out a little bit, because some of the lower gas demand is also due to the fact that this summer it was hot, so solar was good. It was windy, so wind power was much less unreliable than it has been. So to a certain extent, it's a function of two things. One, the residual effect from the previous hikes, and two, because renewables are taking an increasing part of power supplies. But in the winter months, obviously, that's not necessarily going to be the case.
Right. Okay. Yes, the wind and solar is not a support in the winter months. Welcome back, Daniel. I hope your connection stays with all of us this time around. Please do continue. You were talking about, I asked you if the $6 billion was just the beginning of a process of unfreezing $23 billion, I believe you mentioned. You're on mute, I think, Daniel.
Hello?
Yes, we can hear you.
Okay. Can you hear me now?
Yes.
Okay, sorry. Yes, I believe so. It is said that the unfreezing of the $6 billion is a part of a bigger unfrozen Iranian assets, mostly from Iraq, left there or kept there for the gas, for the price of the gas Iran exported to Iraq. And considering that there is another agreement between Iran and Iraq regarding the repayment of the Iranian gas money in Iraq, then where Iraqis since now on are going to pay the money to Iranians via actually a sort of barter deal, exporting fuel oil to Iran and heavy oil, what they call it, black oil in Iran, to Iran anyway. So there, I think there is an opening in Iranian financial resources around the globe that could be a part of a bigger deal between Iran and the United States, maybe related to the atomic program. Of course, should be related to the atomic program of Iran. And I think anyway, considering the situation in Ukraine, the war around going on there, and the crisis is not going to get to an end very soon, Iran maybe has decided to reach a sort of deal with Americans. And that's not going to be something very similar to the JCPOA, the previous agreement, but something maybe the two sides have decided to reduce the tensions, and probably the Iran-Saudi rapprochement is a part of that, a sort of as a bigger picture. You can see Iran is making a deal with Saudi Arabia, reducing tensions with its neighbors, and I believe the deal with Americans could be understood under that context. context, and probably the situation would help Iran to export more oil, especially to China, as it's doing right now. But Iran is also looking after some new markets. You know, Iran is exporting something, well, 100,000 barrels per day to Venezuela, and something less to Syria. Iran is also seeking to invest in Ugandan refining sector, so it can create a capacity for its exports also to elsewhere. There was some negotiations between Iran and Indonesia for facilitating some exports to Indonesia as well. So I believe, considering the situation, 1.5 million barrels of exports to Shandong, to China, there would be no super extra spare capacity for exporting to other destinations, maybe 300,000 barrels per day, something.
Okay, so actually you just answered in your last part what was going to be my next question on how much more scope do you see for Iran to increase its production, and perhaps more relevant for the global markets to increase its exports. Where would you estimate current Iranian production and exports, Daniel?
I believe Iranian production at the moment is about 3,200,000 barrels something, and maybe less. And the exports is about 2 million barrels. But you know, considering the methodology, different companies, Tanker Trackers, Kepler, FGE, Vortexa have different estimations. But based on my estimations at the moment, Iran is exporting something a little bit less than 2 million barrels.
Okay. Thank you.
Sorry,
for that.
and please consider that Iranian refined exports is something about 1 million barrels per day. Okay,
and those go mostly to Venezuela, or
the refined products? No, the refined products, the LPG mostly goes to China. The some other products goes to Africa, Pakistan, Yemen, everywhere, Sudan, Somalia.
Yeah, I think I remember reading LPG goes to quite a bit of LPG goes to Pakistan as well, on land route, right?
Right.
Okay, got that. Okay. Madeline, shall we just have the survey question, and then before I turn to Gulmira again with my next question? Okay, so Brent, as we speak now, is trading around $92.56. The question for today is the $100 mark off the radar now, or is it still likely before the end of this year? So please have your say. So we're only talking about the next 3 and a bit months or so. Okay, Gulmira, turning back to you. So we spoke earlier, with Mark about the coming winter supply situation in Europe, and of course that has quite a lot of the other consuming countries around the world on tenterhooks as well. I mean, certainly Asia here, and LNG importers suffered quite a lot last year as Europe pulled in quite a lot of extra LNG tons. But take us through your view of what happens in the next, let's say, 5 to 10 years. How do you see Europe's energy mix, and where, assuming, of course, that it is not going to get Russian pipeline gas supply back, how do you see the European gas supply situation panning out in the medium to longer term?
Well, with regards to supplies, I think, yes, Russian gas seems to be out of the European market, and Europe will, pay more to import gas coming from other alternative sources, and some sources would be new, like, Azerbaijan, and Azerbaijan started exporting gas to Europe from 2021. But as I said, there are new fields under developments in the country that will provide extra gas to Europe, and likewise, that's going to be other potential supplies that could add to gas inputs of Europe. So it's also North Africa, which is a little bit, seems to me, challenging, because again, African gas demand is growing, especially the Algerian gas demand. And although Algeria also committed to increase its gas export to Europe, mainly to Italy and Spain, but it seems that it's going to be very challenging. And given the those challenges of developing those fields and demand rise, I think again this is questionable whether North African countries, and especially Algeria, will be able to increase its gas export to Europe. LNG is definitely a very strong and reliable source for Europe to replace Russian gas. But the question here is the price. What the European buyer, what price will pay to import gas in the form of LNG or from new sources. With regards to demand, I think demand obviously is going to be falling in the next few years. Again, as Mark said, because of the efficiency measures, demand cut and demand disruption. Again, coming back to this question, I think, it's exactly not reduction, but it's disruption, which means that these volumes of gas may gone and it will not return to the market again. And that's what we've been saying in the German market. Lots of industries, they are moving away from Germany, and it's a huge big industries like BASF and other big companies, so they're moving away to other parts of the world, the US, China, and other countries. So this demand distraction will cause some demand fall in Europe. But in general, I think, again, depending on the weather conditions in this upcoming winter and the following winters, I think still supply security will be in place. Still some Russian gas is flowing to Europe via the Turkish stream, and that's going to be increased in the following months, especially in winter time. So Russian gas is not completely out of the market. I think I don't see any major problems in gas supplies to Europe in the coming years.
Isn't there some fear? I don't know how valid it is, but isn't there some fear that maybe Russia could, as part of this escalating energy weaponization, pull the plug on even the remaining pipeline gas supply that's going into Europe? Isn't that what's driving a bit of a panic situation as well in the European market?
Well, at the moment, what we are seeing is that Russia is planning to stop its export of gas to Europe via Ukraine, but is increasing its export via Turkish stream. So countries like, let's say, Hungary, Bulgaria, some Balkan states, including Serbia, they are still receiving Russian gas because they are in a very difficult situation. They can't afford to completely stop importing Russian gas, via Turkish stream, because at the very moment they don't have any alternative, even some alternative to import gas from neighboring European countries, because the infrastructure is not in place yet, or the existing interconnectors, they don't provide sufficient capacity for them to import gas from neighboring countries. So especially Hungary is a very difficult situation at the moment, which cannot completely stop Russian gas imports. So I think for some time, Russian gas exports will flow to those countries, via Turkey in the following months, maybe years, and then Russia, Europe, and Turkey, they have to find the ways to either continue exporting Russian gas in the form of some new form of, let's say, via this planned Turkish hub, or some other mix this Russian gas with some gas coming from other sources, or completely stop under the pressure of the European Union, you know, and impose all those sanctions. But speaking about sanctions on Russian gas, Europe still you know, importing a lot of Russian LNG, which are not sanctioned. And I guess it's not sanctioned because actually the owners of that LNG plants and shareholders are some foreign companies, including Chinese, Japanese, and other European companies. And those companies are not paying any taxes in Russia because, for instance, Novatek projects, LNG projects are afraid of taxes. They're tax-free in Russia. So I think this is the reason, one of the reasons why the European Union is not sanctioned LNG projects. But I think a fewer Russian gas will still continue flowing to that countries that I mentioned in Europe.
Okay, so we are almost out of time. Let's have the survey results. See what the room thinks. Oh, wow.
Interesting.
Talk about unpredictability, right? Okay. And I suppose we'll be posting this on Twitter as well, and we'll see what a wider survey participants, if they feel the same way, completely split on that century mark, whether it's going to be reached this year or not. Okay, wonderful. Thank you so much for a very enlightening discussion. All my three guests, Mark Oswald, Gulmira Rezavayeva, and Daniel Rahmat. And of course, thank you for all those of you who tuned in. Have a great day ahead.
Thank
My
you.
pleasure. My pleasure. Thank you. Thank you.
Thank you.
Bye-bye. Bye-bye, everybody.
Bye.
Bye.